onto your markets now. It was a mixed picture in Asian markets. The Nikkei share average declined by 0.25%. The Hang Seng Index jumped by 3.27%, while the Shanghai Composite Index rose by 1.02%. US markets remain subdued, with only the Dow registering gains at yesterday's close. Weaker than expected consumer confidence, as well as a number of recent reports, including disappointing retail sales numbers out of the United States, are said to have raised concerns about the state of the US economy. Meanwhile, Tesla's market capitalization fell below the $1 trillion mark overnight, with the stock closing down 8.4%. The decline is said to be attributed to a 45% decline in its vehicle sales in Europe last month. That's despite a 37% increase in overall electric vehicle sales in that region. While the Dow Jones Industrial Average closed up 0.31%, the S&P 500 declined by 0.5%, while the Nasdaq Composite Index fell by 1.35%. Locally, we see that the all-share index is trading in positive territory. It's up at 0.6% at 88,382 index points. The rand is trading at 18.40 against the US dollar, 19.31 vis-a-vis the euro, and 23.26 against the British pound. Gold is trading at $2,914 an ounce, platinum at $985 an ounce, while Brent crude oil is trading at $72.92 a barrel. Well, to break down the markets for us, I'm joined by Chantal Marx. She's the head of equity research at FNB Wealth Investments. Thanks very much, Chantal, for joining us. So as usual, there are a lot of moving parts in global markets, but most of the emphasis right now, or these days, seems to be on the moves that are being made by Donald Trump. He's proposing major tax cuts as well as spending cuts in the United States. Does this bode well just for Wall Street, the investors, and what are the implications for the ordinary man and woman there in the United States?
Well, it's very difficult to say because these things are in stark contrast to one another. So when you cut tax rates, it's expansionary because there will be more money in consumers' pockets. There will be more money in business coffers. So that helps economic growth. But when a state actually cuts expenditure, it tends to be restrictive. So it actually has a negative impact on growth. So I think that the devil's going to be in the detail with this one, and how these two things will interact will have a major impact on how it ends up impacting both businesses and consumers. I think the biggest thing for me around the Trump story remains the potential inflationary impact of these tariff announcements that he's made, and whether or not those tariffs get put in place to the extent that he has promised, because that could have an upward impact on inflation, which results in more restrictive monetary policy, and that would be negative from a growth perspective as well.
Yeah. So the other thing that he's up to is he's trying to broker a deal between Russia and Ukraine to end the war in Eastern Europe. What sort of impact is this having on oil prices at the moment? And going forward, what do you think the oil price is going to be doing?
So what we have seen over the last few weeks is the oil price remaining under pressure. And while we didn't really see a massive impact on volumes of oil and gas exports coming out of Russia, I think it was certainly complicated by the sanctions that have been imposed on Russia. And the idea that these sanctions could potentially be lifted in the medium term, probably resulting in a lower oil price because of the expectation that supply will be more freely available. I think we'll similarly see perhaps downward pressure on the palladium price and on nickel prices. Those are also big exports from a Russian perspective. But most of these commodities weren't actually fully sanctioned. So the impact, I think, will not be as big as the market might be anticipating right now.
Yeah, and to the point that you're making, I think Russia was able to divert the exports that it was making to Europe to other destinations. So it wasn't really that adversely affected.
No, not at all. And I think that the biggest impact ultimately will probably be on the gold price. Even though we do have conflicts elsewhere in the world, the conflict being resolved in Eastern Europe, I think, could perhaps reduce the safe haven appeal of gold, or make it a little bit more vulnerable to downside potential, and certainly cap further upside potential.
Yeah. Chantal, here at home, we got that January inflation print up 3.2% for the month of January on a year-on-year basis, pretty much in line with market expectations. But for you, what does it say about the inflation situation and ultimately what monetary policy may look like?
What has been particularly interesting in this print is that we've actually adjusted our inflation basket to align with international standards. And there's been an upweight in kind of less high inflation items like communication, and there's been a downweight in things like health insurance, for example. So that could actually result in our longer term inflation expectations coming under a bit of pressure. But we still have a lot of volatility in that headline index because you do have food, you do have restaurants, you do have hotel accommodation, which is actually making us up a slightly bigger part of the basket as well. Nevertheless, I think that inflation for the rest of the year will probably average below what we saw last year, even though we do foresee it trending up because the base was a little bit more favorable towards the end of last year. So we still expect below the Reserve Bank's 4.5% for this year, probably just moving up towards about 5% around about December.
All right. And very quickly, AECI, the explosives company that tends to play in the space of mining, but also other sectors, they released their results for their annual results for the period ended December last year, reporting revenue down nearly 4% and EBITDA from continuing operations declining by 12.7%. Your quick thoughts on that particular stock?
Yes, I mean, the result was really well guided for. We know that we've had some pressure from a mining capital expenditure perspective, so that came through in there as well. Chemical prices have been under pressure. They actually managed to turn around that business quite nicely. They're in a big transformation era as a company. So, I mean, even though the stock doesn't look expensive at all, we'll expect the next year to be still quite tough for them. But I think thereafter there's potential. So perhaps for someone looking for a very long-term investment, AECI is your stock.
Excellent. That's what I wanted to hear. That was Chantal Marx. She's the head of equity research at FNB Wealth Investments.